Hello and welcome to the Future of Fintech, a programme from Fintech Circle and ITN Productions. The global fintech market continues to flourish. It was valued at $127 billion in 2018 and is expected to hit $310 billion through 2022. Massive growth in the digital payments sector is driving this, but what else is in store for the sector and the future of fintech? I'm joined now by Suzanne Chisti, CEO of Fintech Circle. Suzanne, many thanks for joining me. The programme is called The Future of Fintech. Why is this so important?
The fintech sector is so important because it's really universal. It helps to provide access to financial services in a much easier way. On your mobile phone, you can nowadays buy any financial products. Number two, it's cheaper. So if you want to send money abroad, for example, foreign exchange payments, costs much less. Number three, fintech companies help to provide liquidity to our economy via equity, via debt financing solutions. So that's really important as well. And number four, one of the key areas is that data is being analyzed better. So big data is turned into meaningful data for better decision making. And last but not least, it's about really helping the whole world by creating an environment where people who were excluded from financial services can be included. And so fintech can reduce poverty globally and can really bring economies to life.
How is the sector being affected now by the impact of coronavirus? Obviously, it's had a huge impact on all of us. And how is it going to move forward from this?
The coronavirus pandemic, had a huge impact on the fintech sector. But what we should not forget is that the sector was almost born out of the last financial crisis. And so fintech is known and is used to work in a crisis mode. And the nice thing now is that the fintech companies help other companies to survive the pandemic. And one way how they do that is by providing loans. And lots of those government loans are distributed via fintech lenders. So we see lots of good work being done by the fintech sector to support our whole economy, during this pandemic. But we will also see that post-pandemic. So in a few months' time, when the government stimulus packages will stop, then fintech lenders can even more step up and provide more access to liquidity to support our whole economy to recover.
There's so much more new tech available out there now. What are some of the challenges and opportunities this provides us with?
You're totally right, Sharon. The new technology we see every day, when we use social media, our social media feeds are driven by big data analytics, by artificial intelligence and machine learning. And those are technologies which are used in finance very heavily. We use them, for better decision making. We use AI machine learning for credit scoring. We use those technologies every day in the financial services.
So many new changes, exciting opportunities happening in the industry at the moment. Why would it make a good career for somebody considering it?
I would say fintech is a wonderful career option for anybody who wants to move into financial services. Because if you are a student, at the beginning of your career, it's so critical to decide which sectors of your target employment space are growing, which ones are declining. And fintech, of course, allows new our young people who enter the workforce to be exposed to the latest technologies and business models and learn from them how they can be applied to actual problems we need to save and we need to solve in our society. And the nice thing about fintech and finance is that there's a bridge of talents going both ways. So you could start your career in fintech and then move into the financial services sector overall, into banking or insurance or asset management, or vice versa.
So Suzanne, what do you see as the future now of fintech?
I believe that the future of fintech will continue to be a booming sector. The fintech sector will grow and it will also consolidate. So we have seen lots of fintech companies being founded over the last few years, and we will see more companies being acquired. Either the fintech companies acquire other fintech firms, or the banks or insurance companies acquire other fintech companies. And last but not least, we will see more acquisition activity also from the tech giants. You know, they are moving into this space heavily. So that's where we will see much more corporate mergers, corporate consolidation taking place.
Okay, Suzanne Chisty, CEO of Fintech Circle, many thanks for joining us. Thank you.
Thank you.
Staying connected has never been more important than it is today. Our mobile phones are the gateway to information, entertainment, communication and shopping. GISP bridges the gap between real and digital worlds, empowering customers of independent businesses to connect in a safe, contact-free shopping environment. Jonathan Gibson went to find out more.
We're all learning to do things a little bit differently. Take going to the shops and the growth in contactless transactions. Jisp is a contactless shopping app, bringing all the benefits of online shopping to the high street.
Your phone is with you almost wherever you go, and your ability to then use the phone to connect with a product through the camera, through a barcode or a QR code, or even image recognition. So that information is then taken into the app, and then we provide information back to the consumer about the product, including the ability to make payment. It's the same person who's on your website as will be walking into your store. So we bring the two together, we merge them into what's called unified commerce.
At this convenience store in Congleton, Jisp is giving customers the shopping experience you wouldn't expect in a corner shop, from online delivery to click and collect, to something that previously only supermarkets had access to. With the Jisp app, even the smallest independent can take advantage of the latest scan and go technology.
It was something I could have only dreamed of. Now we've got a website where people can do the online ordering in whatever way they want it, and it looks just the same as any of the big multiples. But as far as scan and goes, I think that's the difference maker for us, because that's given a small independent store like mine the opportunity to have that technology available.
Shopping done and paid for? As simple as that. The app also works with electronic shelf labels, typically used for in-store promotions. Simply scan or tap, and the product is in the basket. Stuart Reddish represents more than 15,000 independent retailers, fighting to keep pace with a fast-changing landscape.
We've got to wake up to the fact that things have moved on. This is probably something that maybe would have happened in 3 or 4 years' time, but with COVID coming along and the lockdown and people staying at home, and that's what's really drove this to be at the forefront of everybody's minds. What we liked about Jisp is the ease of the app. We also like the fact that the cost of the app, if I'm truthful, it's all about cost for the retail, it's all about margins.
And it's margins which matter in hospitality too. COVID has decimated the restaurant sector, and as demand for in-app ordering grows, Jisp is growing as well, providing services across more territories.
We expect to kind of save 30% of the staff costs we had before on a full restaurant day. People can sit in peace and select and look at the menu and decide without pressure that the server is coming to take their order. When they are finished and they want to leave, they don't need to wait for paying. There is no one that can match what Jisp can offer with such a low cost. Not only ordering and paying, but as I said, marketing and now also entertainment. With the app, we have already as many followers after just 2-3 months as we have had for Facebook followers after 5.5 years.
And that's all down to customer experience.
With our app, first of all, the menu is interactive, so you can engage with the menu, you can tap it or you can scan it and the information is popping up. But more importantly, you can actually see videos of the products, of the menus that you're about to order from. Plus, of course, with our app, you set your allergens, your food preferences. So as you're actually ordering, the system is telling you whether you need to be concerned.
Jisp was also recently chosen as the only non-Norwegian shopping app to be recommended by Vipps, Norway's largest peer-to-peer payments provider, an equivalent to PayPal.
What we're delivering is a disruptive solution that changes the way in which the retailer can deliver the information that the consumer needs.
The world will never go back to how it was. No one could have predicted coronavirus, and no one can say where we are going to be in 5 years' time. But there is no doubt that technology will be a key part of the way we interact with the world and each other, and Jisp is at the forefront of this change.
It's an exceptionally good service.
We all have a direct impact on the environment by the choices we make, whether that's what we eat, where we travel, our day-to-day purchases, or how we live our lives. A standard for the banking industry and technology developed by the Organisation for Sustainable Consumption and tech company Ecolytic informs consumers how their purchases affect the planet, with the aim to make them aware of their carbon footprint and its environmental impact. I'm joined now by the CEO of Ecolytic, Uli Peach, and OFNK CEO David Lice. David, as the founder, tell us how something as simple as the clothes we buy can really have an impact on the climate.
Yeah, it was a pleasure. As you said it already, everything we do actually has a direct impact on the environment. It doesn't matter if I drink my coffee in the morning or I'm buying a clothes somewhere. Everything we do has an impact. It's on the transport and the shipping, on the manufacturing, everything has an impact. And the problem, however, is to figure out how much this impact actually is and how much I'm causing by buying this impact. And the good thing is, in a consumption-driven society, everything we do is somehow linked to a purchase, or at least most of the things. And what we believe in is using this payment data in helping consumers to understand what is their individual impact on the society. And therefore, we thought we need a standard, an industry-wide standard, to actually make sure that all banks and industry have the same underlying methodology and the same values.
So, Uli, you developed a technology to really put this into practice. Tell us a bit about how it works and what some of its main benefits are.
Yes, I'm happy to do so. So we basically support three phases. The first phase is actually measuring the impact. And we do that on a transactional level. So for each of your purchases, we calculate a footprint. If you go to a restaurant and spend 30 euros there, we deliver you your CO2 value to it. If you book a flight, the same thing is happening. So we actually aggregate all your transactions and you get a monthly impact, which you can understand and which you can learn from. So measuring is very important. It's the basis of everything. And the second phase, after we measure it, is we educate consumers, because, you know, if we say that your restaurant visit is 36 kilograms of CO2, what does it mean? Is that a lot? Am I doing good? Am I doing bad? How can I reduce that? What can I do as an individual? So we give tips and tricks and hints how to reduce it. So on a category level, which means for the restaurant visit, for example, did you know you don't have to turn a vegetarian if you just exchange white meat for red meat? You can reduce your impact by a factor of 4. Did you know that? So little helpful tips and tricks for the consumer.
And who would you say are the main users of this, and is it widely available at the moment?
Yes, the main user. So we see ourselves as a B2B provider for banks. We enable banks to do sustainable banking and to implement sustainability strategies, because what we want to do is to have an impact. And how do we have an impact? We only have an impact if we speak to millions of consumers. And who owns these consumers? Who owns the payment transaction, purchase transaction of these consumers? These are the banks. So we offer our software to the banks so they can implement it and, influence millions of consumers with our technology.
And David, why is using payment data so crucial in the fight against climate change?
because we need to enable consumers on a very large scale to actually understand what is their individual impact and also motivate them to actually do something about climate change. And payment data are not really perfect, but they are available in a very large matter and available for all of us in a very long time. And they're the perfect foundation to give a transparency to consumers.
And David, finally, looking ahead, what sort of impact would you like this to have now on society, on our planet, on a wider scale?
Well, the perfect scenario would be if all banks in the world would adopt the standard, and all banks in the world would kind of help consumers understanding where they are, and then helpfully guide them also on how to behave better for a more sustainable future.
Okay, David, Uli, many thanks for joining us. Thank you.
Thank you.
Thank you.
Improving efficiencies in loan syndication can positively impact the resilience of millions of businesses, the banking sector, and the global economy as a whole. This topic has become increasingly more important as a result of market changes and the global pandemic. HUBX has partnered with Finastra to bring lenders and investors together on a single platform to provide an end-to-end digitised solution solving many of the challenges in the global loan syndication market. Our reporter went to find out more.
The world of investment banking and capital markets is known for its capacity to move fast and apply the latest technological innovations. And yet one area that has yet to experience the kind of transformation we have seen elsewhere in banking is syndicated lending. This is HUBX Arranger. Over the last 12 to 18 months, small London-based fintech HUBX have been working closely with Finastra, one of the largest fintechs in the world. By combining HUBX's front office solutions with Finastra's back office technology, for the first time it is possible to execute syndicated loans digitally end to end.
HUBX Arranger, in partnership with Finastra, is the first time that front office teams can leverage data insights in a dynamic way. We set up HUBX to build solutions for professionals to execute those private transactions. Within the network and beyond, we see a real opportunity to connect every part of a capital raise, front to back, to help these professionals better understand data, better execute their deals, and better engage with all the stakeholders involved in the deal.
Finastra say the integration of HUBX Arranger to their already hugely successful back-office syndicated loan product, Fusion Loan IQ, will change the private capital landscape and allow hundreds of banks to collaborate more fluidly to lend cash with less risk.
We saw a natural synergy in the syndicated loans market to integrate HUBX and its powerful capabilities to match lenders, find investors, etc., into the ability to then book run and kind of build that capability into feeding into our Fusion Loan IQ product. The more that we can bring product to the market that enables the velocity of syndication to increase, to enable the scope of people who can more actively take part in syndicating deals and bringing new loans to the marketplace, certainly really can enable a much broader market out there.
And the market is huge. Over $4.5 trillion is executed in syndicated lending each year. Finastra is a market leader. Its flagship product, Fusion Loan IQ, is used to process over 70% of the world's deals. The technological partnership between HUBX and Finastra has the potential to impact how millions of businesses are able to access funding around the world.
Traditionally, syndicated lending, I guess, has been dominated by larger banks. We have, a number of smaller banks that play in this space. And so what's great about this is tools like HUBX have been able to come in and integrate directly with Loan IQ. And so when you think about how, traditionally you would go to an engagement with a customer around trying to solve a problem, it would be a one-to-one relationship between customer and software vendor. But what FusionFabric.cloud is allowing us to do is actually consider innovation that sits within the financial services ecosystem as part of what it is that we are delivering to help solve those problems.
The HUBX Arranger solution has been specially developed to complement Fusion Loan IQ. It will save time, cut costs and reduce human error. So how does it actually work?
3 main steps. It's the origination process, which is the preparation of the deal. It's the distribution process and matching and finding the right lenders for that deal. The integration with Loan IQ is absolutely vital because we will then pass that information through to Loan IQ, and the transaction, Loan IQ will then handle all of the post-trade processes. The integration of the HUBX Arranger solution and Fusion Loan IQ will be an absolute game changer for the future of the syndicated loan market.
HUBX say the future is bright. What they are bringing to banks and the market, alongside Finastra, has the potential to radically change the way in which the syndicated lending landscape functions.
The open nature of fintech is a clear break with traditional financial services. Investors are looking for higher returns than the usual routes can offer, as well as lower risks to their investments. Fintech lending platform Lenderwise has identified a gap in the market and created a service where lenders can earn interest from the global telephone market, offering new opportunities whilst mitigating risk. I'm joined now by Lenderwise founder and CEO Lawrence Giglioli. Lawrence, tell us a bit about how Lenderwise works and what sort of impact you're having on the telecoms sector.
Well, the founding partners of Lenderwise come from the telecom industry. Actually, we have over 20 years of C-level experience with global telecom operators, and we've identified a specific need in the market, which is working capital. Telecom wholesale operators need more cash. It's a very cash-intensive business-to-business activity from telecom operator to telecom operator, and that's the problem we are solving. We are helping our clients to increase their revenues and increase their margins thanks to the working capital that we are providing to booming telcos.
And how does Lenderwise differ from others in this market? What sets you apart? What makes you unique?
There are some new lenders to the telecom sector, which is proof that the need is there, but none have the fintech platform that we have created. Our fintech platform mitigates risks, both for our clients, the telecom operators, and for our lenders and investors. The fintech platform allows us to certify that phone calls are real, that invoices are real, and that there are no discrepancies between a client invoice and a supplier invoice. This means we are helping our clients to do more business, and we are helping our lenders to make safe investments.
You've set up a partnership now with credit insurance company Euler Hermes. What's significant about that partnership and what will it bring to the sector as a whole?
Well, Lenderwise's goal is to mitigate risks for all parties, for our clients, the telecom operators, and for our investors and lenders. We have a partnership with Euler Hermes, which is the largest credit insurance company in the world, which is using our platform, accessing our platform, and is able, thanks to our platform, to view if their credit insurances are allocated, to what extent they're allocated in invoices, and to see the payment behavior of the clients. These two features give Euler Hermes the ability to better allocate their credit insurances. It gives us the ability to mitigate risks for our clients and for our investors. It's a great win-win relationship.
Looking to the future now, what kind of goals do you have in terms of social impact and reaching a wider diversity of clients?
Well, Lenderwise is associating finance to telecom in a very innovative way. And today we are working with institutional investors. Tomorrow we intend to lower the entry level and to allow consumers to have a new democratized lending opportunity to convert what they're already paying for, their phone bill, from a cost center into a profit center. Likewise, to convert their bank savings account from a zero interest rate to an interest generating account. So we are converting, over time, we will be converting two human necessities, a phone and a bank account, from a cost center to a profit center. We are democratizing the lending industry.
OK, Lawrence Sciglioli, many thanks for joining us. Thank you.
Thank you.
Last year in the UK, over 40 billion payments were made by debit or credit card. These transactions are potentially a rich source of useful data for business owners, but 90% of the time when a customer makes a payment, their preferences and buying habits are unknown to the business owner. Payment solutions provider Trust Payments believes that there is a huge opportunity to open a world of data to merchants and breathe new life into their consumer loyalty strategies, as Carolyn Sim reports.
When shoppers go to town, merchants want to keep them coming back. Loyalty is everything. But many businesses don't know anything about the habits and preferences of their customers until the point of payment. A new solution combining loyalty and payment systems is unleashing valuable data to change that. It's been developed by Trust Payments.
That transactional data will give business owners a deeper insight into how many times customers are buying from them, what they're buying, and what their buying habits are.
If you combine these two solutions of loyalty and customer behaviour and customer understanding with the back-end systems of payment, you then really truly understand the world of converged commerce. And that world of converged commerce means that you can take a customer on a journey, and whether they purchase in store, whether they purchase online or through a mobile app, they can then get the benefits of that personalised service. Now that's very valuable for merchants, because then their whole way of doing business can be much more focused and targeted.
The fashion and homeware retailer Matalan is embracing this approach. Its 12 million member loyalty scheme has been fully digitalised by Trust Payments. What started as a card-based rewards programme is now a fully fledged app.
There are instant rewards that they can win for identifying themselves, and then they get birthday offers, they get welcome offers, entry into competitions. Customers are able to both shop on the app but also engage with loyalty, so they're able to view their tier progress, they're able to view their offers that have been associated to them, and also redeem those offers both in the app or in store via a scan of the app. So it's really kind of where loyalty and commerce come together. The more data that we get, the more we can pass back around the funnel to drive more payments, and again it's kind of an ever-flowing cycle. So as we build up that 360-degree view of the customer, every data set that fuels into that will help drive more behaviour and more personalisation for the customer.
Trust Payments helps merchants translate that data so they can focus on sales and marketing.
One of our objectives, particularly as we go into next year, is to be able to, rather than make our customers react, give them data points that they can use to proactively act. So we can say, hey, here's 3 to 5 things that really will impact your business. One of the real benefits we'll be providing is a prioritized hit list, if you will, or action list, which makes it much easier to sort through and understand the impact of the significant amounts of information that are out there.
The system can therefore work for businesses of any size.
It makes it much more feasible for some of the smaller and medium-sized merchants and our clients who don't have enterprise-sized budgets to actually get a really targeted, really personalized customer engagement platform.
Smaller businesses having to compete with the likes of Amazon, they can only do so by giving a really phenomenal customer experience and customer journey. And they do that fundamentally with data, with understanding their customers, understanding their customer behaviour.
Trust Payments believe that tying together loyalty records with payment data is a powerful solution, delivering a better buying experience for the customer and better business for merchants.
Collaboration in the financial market is important to harness opportunity and to keep up with the pace of changing technology. DLA Piper uses its expertise and strong industry relationships to bring together the right participants to deliver innovation and success to the financial sector. I went to meet them. Technology is escalating at a pace never seen before in our history. Like so many other industries, the financial sector is having to quickly adapt how it interacts with its clients by diversifying what it offers them. One of the city's top law firms is flourishing by helping its clients navigate the compliance risks and delivering services that enables those clients to thrive. DLA Piper is one of the world's largest law firms. It advises its clients on a broad spectrum of issues right across the fintech sector. The company's clients include a range of financial institutions, venture capitalists and other investors, all looking for a more immediate and more transparent service.
This time, technology is really changing the way the market works. So those businesses that are going to be successful are those that are bringing technology effectively to market. It's really important that we as a large law firm are able to not only help them develop their technology, but also bring our technologies to support them in doing that. And that's one of the things that we're doing, either providing tokenization platforms or providing a regulatory app, which is an AI-based product which will go through the FCA sandbox. These are really important products for the clients.
3 years ago, Graham Rodford left an asset management firm to set up a regulated exchange for digital securities, a blockchain-based exchange. He partnered with DLA Piper from the outset to help with the company's FCA application.
When we met with DLA Piper, we were looking for a firm that had significant experience in FCA regulation, as well as the technology that we were using. And we were really taken aback by the experience of their team in both of these fronts. And more importantly for us as a startup was finding a company that was willing to work with a small fintech, but had the global platform that DLA Piper have. And we really appreciate that loyalty, and hopefully it's the start of a long relationship together.
DLA Piper is located in more than 40 countries and advises thousands of businesses, from the biggest financial institutions to the smallest startups. The company helps them deliver their services through new platforms using developing technology.
Collaboration is key in this space and in the fintech sector to working closely with our clients to deliver the best legal services that we can. So we're really working with our clients to get to know their business, their sector, and also the technology drivers that they're using to improve their business, which we're also learning from.
Revolut is an electronic money institution which provides a full suite of banking services to its customers. It's completely app-based and, according to Deloitte, is the fastest growing fintech company in Europe.
One thing we've really valued DLA's support on has been our cryptocurrency product. It's a product that customers really want, but our banking partners don't want exposure to. Working with DLA, we've designed a product that allows our customers to get exposure to the price of cryptocurrency, but without us holding it on our books. And so with us being able to minimise that exposure to our banking partners.
ING is one of the world's largest banks with 55,000 employees. It's ranked as one of the top 5 blockchain banks in the world. ING has been collaborating with DLA Piper on Project Pictor, a digital assets project, for the last 18 months.
We're working on the Pictor, which is really like a niche market, working like with blockchain. And DLA Piper was an obvious choice because they have this expertise like on the blockchain technology as well as a regulatory framework. And they work like together with us, for instance, in a sandbox environment of the FCA, and has been a great help to coordinate like in discussion and the representation like with the regulators. On top of it, like DLA Piper was great to introduce us to their own network, which helped us to extend our like a network of ecosystem of financial institutions even further.
DLA Piper, enabling a wider investment audience from global institutions to startups to legally function in the fast-changing world of fintech and help them combine their resources to create an ecosystem where all can succeed. Financial accounting and reporting systems are the backbone of every business. But for many insurers and brokers, they're still hampered by manual processes and antiquated systems. Financial software company Phinsys is helping businesses grow leaner by embracing modern technology solutions, something which will be key in a post-COVID world. Robin Ross reports.
The global insurance industry is facing tighter regulatory reporting and pressure to keep costs down. It's led to a push into insurance technology and automated trusted data.
If insurance companies don't move with the times and move into automated processing of data straight through, they are going to forever be increasing their cost base by adding on more people. They're going to find that they're unable to grow at the same speed as people who have taken on these initiatives. And ultimately, they're going to end up finding it very hard to get a return on that capital.
The idea is to move businesses from the old world of spreadsheets to the new world of accurate data.
Finance and actuarial teams often work with different untrusted reports from user-built spreadsheets, leading to human error and making reliable planning for the future extremely difficult.
80% of the time they're spent doing very manual, data-intensive processes, leaving very little time for higher strategic value work and understanding how the business is operating.
Phinsys is a global business offering software that optimises the finance and accounting processes of insurance and broker businesses. The team come from the world of insurance and IT, so understand the challenges of the industry. They help Jason Townsend's company replace its complex spreadsheets in favour of one source of data shared by the finance and accounting teams.
Phinsys completely transformed the way we do all of our sort of financial and accounting processes. Data is everything. Data nowadays is sort of driving all of our strategic direction. Rather than sort of spend most of our time sort of collating data, we're now actually spending more time analysing that data because we're getting it sort of quicker and easier.
95% of businesses cite the need to manage unstructured data as a problem, but they resist change, fearing long, expensive projects which have minimal impact.
So when we did implement the Phinsys suite of products, what we did find it was relatively inexpensive and actually only took a few months to implement. It's made us scalable. So rather than employing headcount to sort of drive some of these sort of data decisions, we've invested in the systems, which just means we're a scalable business.
Finance transformation is quite often associated with huge amounts of new hardware and new support requirements associated with that hardware. That's really no longer the case. Cloud delivery means that there is no incremental requirement for additional hardware, and actually software is serviced remotely in the cloud. It actually reduces the burden on IT departments.
With acquisitions come different systems from the acquired company, as well as different sets of data that they need to integrate into their platform, and we allow that to happen very, very seamlessly.
One of the biggest drivers towards automated data has been COVID-19. The streets are much quieter. Remote working is the new norm. A survey of CFOs found nearly half plan to accelerate automation and make remote working a permanent option.
By moving to home working and not having that immediate availability to talk to a colleague, compare and contrast kind of results, has meant that we're seeing far more risk creep into that, which leads to keying errors, which leads to inaccurate financial information, and teams are suffering. Businesses cannot continue to operate in this way.
Insurance technology is also helping to ease the burden of the financial close.
As the years have gone by, the sort of pressures on regulatory reporting with deadlines and sort of quantity of data is just increasing by the year. So the Phinsys suite has enabled us to go from sort of weeks of reporting to our parent up into the US, now down to days.
What we're trying to do is end up giving people the ability to scale and grow that top line premium, grow that business without increasing headcount significantly within the finance and general back office functions.
The insurance industry is waking up to automated data to avoid being left behind.
Understanding the real-world impacts of multiple businesses can be a complex and time-consuming process for investors seeking to react to a changing market environment quickly and effectively. Sue Saville reports on how financial services company Moody's believes that AI and fintech are strategic enablers for providing sustainable finance solutions to their clients.
So many of the factors that investors must assess are not found in the balance sheets of companies, but relate to aspects like supply chains, employee brand, reputation or climate impact. The real risks go beyond the financial, requiring multi-stakeholder insights into the environmental, social and governance considerations that underpin sustainable finance. Andrea Blackman heads up the ESG Solutions Group at Moody's.
Andrea, how do your services help clients with their complex risk modelling and valuations?
At Moody's ESG Solutions, we're really focused on pulling together data, metrics, and transparent frameworks that allow people to evaluate, model, and manage risk. What sustainable finance helps people to do is set up goals and frameworks and objectives that they're going to manage their investments toward. And then it gives the market the ability to monitor and screen for those different criteria. And it just allows for the greening of the economy and the evolution toward responsible capitalism, where companies are able to clearly articulate what they're trying to invest in order to achieve, and investors are able to understand what those initiatives are and then deploy their capital appropriately.
Environmental, social and governance considerations have transformed investment decisions in just 5 short years since the Sustainable Development Goals of the Paris Agreement. In 2015, under 5 billion euros were invested in European sustainable funds. Now that figure is over 50 billion euros and growing.
The fourth industrial revolution has begun, with innovation and ESG intrinsically interlinked. Artificial intelligence and fintech are strategic enablers for the monitoring, measuring and managing of ESG risk, according to Martina McPherson, Senior Vice President of Strategic ESG Engagement at Moody's.
There's enormous potential for artificial intelligence, blockchain, fintech applications generally, and environmental, social and corporate governance information when and where information gathering of big unstructured data is concerned. Ultimately, AI can help to break down information barriers and biases. It can actually look at modernizing information architectures for really business-ready and real-time ESG and other data solutions. As far as the social dimension is concerned, which is very often linked to more qualitative information, we also need the next generation of ESG information tools that can help us to quantify, measure, and benchmark the implications for the social dimension.
And in the social dimension remains human capital, with talent management a prerequisite for long-term success in innovative, sustainable fintech. The next generation of leaders is already here. Young executives like Kiran Gwilliam Bahari of VE, who values collaboration to find solutions for issues such as climate change.
Climate is a very multifaceted challenge, and in order to address it, you need to build quite a sophisticated array of tools in order to serve the different needs of banks, of insurance companies, and of corporates as well. And it's been by collaborating and innovating together that we've been able to build kind of a solution suite that can serve all of those different needs.
To achieve the UN's Sustainable Development Goals in this decade of action, the right tools are needed to translate macroeconomic developments and microeconomic impacts, so companies, issuers and investors understand how environmental and social factors collide to create new challenges. ESG has moved from a niche investment consideration to centre stage, with AI and fintech helping build more resilient financial markets.
The COVID-19 pandemic continues to deliver uncertainty to every sector, yet paradoxically it also brings with it the opportunity for growth and development. We went to see how the fintech revolution has picked up pace in 2020 as businesses adopt transformation processes to manage systems to better serve their customers.
London has long been regarded as the financial capital of the world. Its location allows bankers and traders to serve markets in Asia and North America during business hours as well as European ones. It now stands virtually empty as the COVID-19 pandemic has forced businesses to turn to more digital processes, and they're looking to the fintech sector to provide some rapid solutions. With many working in financial services now largely home-based, the pandemic means fintech is under enormous pressure to deliver. The Centre for Alternative Finance at University of Cambridge Judge Business School has interviewed financial regulators and policymakers on a rapid assessment of the impact of COVID on fintech regulation.
Part of the study looks at, how are fintech firms, these firms that have developed innovative ways of distributing and making financial services available. How is COVID impacting them? And doing that at very large scale, right? By really getting them to reveal how their businesses were changing and how their markets were changing.
Financial regulators reported an overall increase of 60% in digital payments. The study showed 78% reporting online security as an increasing risk. And 90% said they'd benefit from further training to support their work on fintech under COVID. The Cambridge Centre for Alternative Finance worked with Fintech Circle, a global platform of more than 130,000 fintech specialists, to reach out to its members to participate in the survey for a soon-to-be-released parallel study which examines the impact of COVID-19 on fintech firms.
To make these studies impactful, you need large-scale data. You need to collect it quickly. You need to get your results out quickly so people can respond quickly. COVID's happening now, right? And so it's working with Fintech Circle, for example, that we're able to reach out to their network, very, very valuable in being able to support that data collection.
Fintech firms multiplied after the financial crisis in 2008, but potentially unfair competition loomed from huge platforms moving into financial services. A paper jointly authored by the Cambridge Centre for Alternative Finance and economists from the Bank for International Settlements looks closely at the growth of this non-bank lending, or big tech.
The power of these big tech platforms to take an increasingly potentially, and I'll underscore potentially, dominant market position in financial services is something that, again, people talk about, but no one had really measured that growth relative to measuring the growth and expansion of the fintech activity, specifically in lending. And that's what we did.
These additional players create problems for regulators who need to make sure that they can curtail monopolistic behaviour through regulation or regtech.
When we talk about regtech, that's often the descriptor used to describe the application of technology for regulatory compliance and reporting processes within the firms that are regulated. But many of the same technologies are relevant for the regulatory supervisors, which we call subtech.
This rapid growth of digital activity alerted the fintech sector to the need for information that could be quickly disseminated by those unfamiliar with the basics. A series of books jointly written by Fintech Circle members is helping to make the industry more accessible.
Many people worldwide were interested, in learning about financial technology, but did not know what it actually means. What is fintech? What does it stand for? And how can you actually use it and benefit from it? Fintech is an umbrella term. So within fintech, we've got innovation happening in asset management, in private banking. So this is called wealth tech. And innovation in the insurance sector is called insurtech.
Other books cover payments, law, and artificial intelligence.
And just a few weeks ago, we published Fintech for Dummies, which is almost like an entry guide, in the world of fintech, and really helps people to understand what fintech is all about.
The series is essential reading, not only for the global fintech sector, but also for those who want to work with it effectively.
We reach out to a global community of co-authors, and I'm the editor-in-chief. So myself plus my team of co-editors, we then try to pull the best parts together to share this knowledge in a very practical way with our global audience.
Fintech is moving forward by focusing on collaboration. Although the pandemic has brought great challenges, by working together, the sector believes it can turn adversity into advantage.
Thanks for watching The Future of Fintech. All the reports are now available in full on the Fintech Circle website and the ITN Productions Hub. The details are on the screen now. From me and all of the team here, many thanks for watching. Goodbye.